In recent days, all altcoins have been experiencing a dramatic drop. Look at how Cardano has performed, also how they've pushed down Polkadot, and the meticulous compression work they've done with SHIBA INU. It seems that the smart money no longer intends to support the altcoins. However, if we observe Bitcoin after the major drop, we've only seen a recovery. And honestly, the same can be said for Ethereum. Look at how in Ethereum, they've set up a trap scenario where smart money has aggressively positioned itself to buy. Similarly, in Bitcoin, the same has occurred: institutional aggressive buying. What can we then expect from the crypto market? Let's start with the altcoins, and now you're looking at the Cardano chart. While it's true we've been monitoring this momentum and this bullish channel, at the time we were looking for a final deceitful bullish climactic action to then move strongly downwards. What we've seen is that smart money has triggered a movement catalyst, and that movement catalyst was nothing but the release of news that were nothing more than rumors affirming that the SEC was about to reject the Bitcoin spot ETF. Ultimately, this decline was a completely unexpected event, and the eventual defense zone we were observing frankly collapsed, fueling all altcoins to seek further bearish continuations. Look at Polkadot, how we defined a very relevant level for its valuation, and if we move further to the right, we'll see how recently it aggressively reached that important structural level. Smart money has been working on a distribution process, and they faced an unexpected market event, which was that breakout. Instead of working on a defensive zone, somewhat like the last lifebuoy, they decided to override it, much like Cardano, event that only supports bearish continuations. SHIBA INU, our favorite cryptocurrency for short positions, we were already observing how the breakout occurred within 30 minutes. It didn't give retail investors time to look for a bearish addition in their asset, which we were waiting for, as soon as we saw that compression against very relevant structures. After that breakout, what we were expecting was a minor correction, which we hoped could be stretched out more over time and then continue its movement. But it seems that altcoins are not fooling around, and the bearish attraction and momentum are sweeping absolutely everything aside. Look at Solana, the favorite cryptocurrency in the middle of the crypto ecosystem, given its recent significant bullish volatility. Frankly, it's worth studying, but you see, we were analyzing this point as interesting, without ever intending to be smarter than anyone else to claim that this was going to be the final point of reversal, because frankly, we don't have a crystal ball, nor do we presume to have one. But at this point, our great obsession was to look for some kind of compression. Look, here they're compressing the price against a relevant level. Then came that unexpected event, that significant breakout, which disrupted any attempt to seek that deceitful bullish climactic action before offering us the movement we were eagerly awaiting. And after that event, they simply worked out a flat pattern that sought some liquidity and then broke it and continued consecutively with its fall. Frankly, smart money has made it very difficult to see what they're plotting for their future moves, because remember, we gave great value to the fact that the price would have been a great declaration of intentions if this candle had closed a bit lower. But upon seeing that candle, that absorption, on one hand, if each one fueled the crypto ecosystem temporarily, as we told you to look for a creek for a long, that's what the entire crypto market has offered, and what defended our hypothesis was that absorption. But notice they've gone for very measured targets to then continue their movement. Hence, I tell you that this recent volatility, these lashes, are making it complicated for us to read their intentions. And now tell me, what do you specifically think about altcoins? We'll move on to Bitcoin and Ethereum later, but first, I want to hear your opinion about altcoins. Do you think these bearish structural breakouts will lead to a succession of falls, or conversely, are we in a trap scenario? Share your thoughts in the comments. Also, like the video, subscribe to the channel, and click the bell icon to get notified of future publications on YouTube. Now, let's highlight the difference in why altcoins are falling as they are, and why significant cryptocurrencies like Bitcoin and Ethereum are managing to maintain their relevant structures. Well, let's jog our memory and see where the origin of Ethereum's breakout lies, which gave us confirmation of a bearish market. We structured this breakout's origin, and you're now seeing it reflected in a rectangle. Then, recently, Ethereum's price, as you're observing, as the entire crypto ecosystem has done, has been driven, pun intended, by a bearish impulse, which they're now continuing with a channel. As we've been saying, we've noticed that altcoins have broken through their relevant structures with a lot of force. Not only that, but in their attempt to recover, they've executed flat patterns, they've pierced, even they've continued. Well, it's the ABC of extending a bearish trend from an aggressive structural breakout. While both Bitcoin and Ethereum kept the flame alive that this cascade of declines in altcoins didn't have to happen. But as soon as we saw the defense zones collapse, now the die is cast, and yes, we can look for these continuations. But now, we're talking about Ethereum, and you'll be realizing the the following. Right now, we're in a ranging phase. While we've been talking for a long time about a bullish climactic action before a fall, that scenario, yes, is still on the table, but it's no longer of vital importance or obligation for that climactic action to happen. Essentially, altcoins are telling us the bearish party not only has begun but is underway. But, well, here we should also consider that whether it's today, Monday, January 8, or tomorrow, January 9, or Wednesday, January 10, the news of the approval or rejection of the Bitcoin spot ETF will come. This news is going to generate a lot of volatility, and this volatility could generate the last bullish lash here. We question whether they'll necessarily seek those clearances and come by here before falling. This is no longer entirely necessary, but will potentially be defined by the volatility of the news, and that volatility can stop wherever it desires. Then, indeed, look for that bearish movement. Well, frankly, when we see altcoins bleeding as they are, and we witness the major cryptocurrencies like Bitcoin and Ethereum holding their ground, what this implies is that exposure to Bitcoin and Ethereum is increasing. So tell me, who would want to invest in altcoins that are plummeting if we see Bitcoin and Ethereum standing strong? This is when the retail investor makes a rotation. This rotation favors market exposure, and that exposure is something the smart money looks upon with sheer desire. We just need a catalyst in the form of news, which we've discussed enough, to present that news, generate volatility, and then have the smart money cash in on that bullish exposure to take down the market. I'm not sure if I'm making myself clear, and if you're still not aware of what's happening regarding the approval or rejection of a Bitcoin spot ETF, which is being led by major investment banks, I suggest you watch our latest video where we detail backstage happenings in exquisite detail. I'll leave that video up there on the right in the YouTube cards. So here, let's move to an hourly time frame, as if we zoom in a bit, and here we see the event that has brought disaster upon all altcoins. In Ethereum, on the other hand, they've simply gone to find a structure. They've defined a defensive zone, which they trapped us out overnight, only to recover it and confirm it early in the morning to go upwards. If you want to know how important this is, let's analyze the inside of the candles to have much more advanced and detailed information that can explain what we can expect for the short and medium term in crypto. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Here we are looking at that relevant level, a significant level that later came to be confirmed and abruptly stopped to then generate this trap scenario in Ethereum. Analyzing the number of lots entering consecutively, we've identified that within the same zone, 1844 lots were purchased, equivalent to 1653 trades systematically, even causing a slippage of 15 ticks. In simpler terms, it means that major institutions have been actively buying into this market trap after absorbing these bearish movements, thus driving the price upward. So, what we're seeing is that major institutions in Ethereum seem to be going long. So studying a potential future breakout of this structure could be positive, at least to look for a correction of this bearish momentum. Therefore, we'll see if we'll break the creek to look for an upward movement. If, against it, we see that the price is unable to break the creek, that it doesn't break it, and then it threatens our defense zone by piercing it. This event wouldn't favor seeking long positions, but we want to believe that these institutional buyers who purchased in the trap scenario will have the strength to seek an expansive bullish movement. What needs to be done here is to keep track of the price. Now, take a look at how during the recording of this video, the price is already surging. Look, live action. Well, let me share with you what we're seeing on this chart. Initially here in Bitcoin, we had the major crypto downturn that we've been mentioning, how strange it was for Bitcoin to leave a wick below a structure we've been working on. Hence, the idea with Bitcoin was to look for a creek to find a bullish operational idea. A bullish operational idea that experienced a correction, and they are now seeking its continuation. That's pretty much what we've been trying to convey in this video. So, what has seemed interesting to us? On one hand, after the creek, the price respected the defense zone. Frankly, this tells us a lot. Not only that, but they've set an advanced level that they've decided to manipulate. We'll now see how they've done it, which we're going to give great importance to in order to justify that bullish continuation. In the order flow chart, we'll look at the inside of the candles. I want you to pay attention to the following. If here we had a relevant level where selling had had clearly been attempted without any success. Therefore, it seems like an important level to monitor. Then, we see that at that level, as you'll now see, they create a trap scenario. Initially, we notice a dry up in the tape, little transactional interest in an attempt, as seen in the delta, and in the red cluster, clearly bearish, we see it doesn't thrive. And in the consecutive candle, they reveal 61,000 lots. That's a total of 366 trades going long in a trap scenario. And it's capable of recovering, buying again, and pushing the price up. That's why we were seeing that for the immediate short term. There's a bullish priority for Bitcoin and Ethereum. A priority that, during the recording, as you're witnessing, the price has already surged. Such are the quirks of the trade. Well, in Bitcoin, they've broken through forcefully. Look how close they would be to seek a tricky breakout, a final tricky climactic move. Let's see if it comes accompanied by the ETF news and then reverses. In other words, with Bitcoin, we're bullish. We continue to be so. We already were from here, but we've had the breakout as we're recording. Now let's think we're in search of a Z, and let's see if we get a correction first or not. But the idea is to seek strength and upward expansion, with the aim of finding a trap. Let's see if this is accompanied by the news of the Bitcoin spot ETF, and then they crash the market. And let me update you on Ethereum because, as I've said, the price is evolving. As I'm recording, we're now attempting to break that structure. It needs a bit more strength injected into it. But if this eventually breaks, any pullback could be good to look for an entry for an upward expansion move. Now tell me, what do you think about the approval or rejection of the Bitcoin spot ETF? Do you think we'll go long or short in the short and medium term for crypto? Leave your opinion in the comments. Also, like the video, subscribe to the channel, and click the bell for future notifications from YouTube. Share this video with your friends and other cryptocurrency and trading communities. Best of luck with your trades. And now, I'll tell you, it's very important to see how this candle closes, since if it doesn't close around here, we might get a pullback before attempting a breakout. And now, I'll wish you good luck with your trades, and until next time.